the Malta Business Bureau, Alison Mitzi, to give us an introductory note. Just as a side note, I'd like to inform you that this event is being recorded so that we can also share with those who were not able to join us this morning. So Alison, I pass on the word to you. Thank you. You are on mute, Alison.
All right. Thank you. I'm sorry about that. Good morning, and thank you for making the time to join us for this webinar on this important topic of the EU VAT in the digital age. Why is it important, this topic? Because it brings more transparency, fairness in the platform economy, and further simplification for cross-border business. Well, as a way of introduction, first I would like to introduce and present the Malta Business Bureau for those, especially for those of you who are joining us for the first time. We are an organization which deals with EU business advisory services, and we represent the Malta Chamber and the Malta Hotels and Restaurants Association in Brussels and Malta on EU-related matters. Our aim is to inform the Maltese business community, as we are doing today, about upcoming EU policy and legislation, while communicating opportunities and concerns to EU officials and legislators. Now, focusing on today's topic. VAT is a major source of revenue, as you all know, for the EU member states' budget, as well as for the EU itself. Yet, the transformation in the last decades to a more digital economy and the development of a new business models have created new challenges for tax administrators. The current framework leaves gaps that can lead to unpaid taxes or fraud, which not only result in less revenue for the state, but also create an unlevel playing field in the private sector. Furthermore, over time, the VAT system has also become increasingly complex and burdensome for businesses. VAT rules dating more than three decades are not adapted to doing business in the digital age, and thus call for reflection on how technology can be used to reduce administrative burdens and related costs for businesses. With this in mind, it is in its action plan for fair and simple taxation, the European Commission proposed the VAT in the digital age package, which is aimed at, firstly, to modernize VAT reporting obligations and facilitate e-invoicing. Secondly, to update the VAT rules for the platform economy. And thirdly, to move to have a single VAT registration in the EU. The MBB supports the European Commission's initiative to improve the VAT system in the EU through the use of digital tools. While digitization itself cannot address the complexity of the current VAT rules in full, a strengthened and more harmonized use of digital applications can be a tool to simplify VAT compliance for taxpayers, generate more cross-border trade and additional revenue, and act as a stronger defense against VAT fraud. We understand that there will be some administrative burdens linked to the introduction of the new reporting obligation, but on the positive side, the difference in data reporting requirements between EU jurisdictions would be eliminated. Some associated costs with new IT investments are expected, and this is why we call for a sufficient implementation period and possibly public funding to support small businesses to adopt the necessary changes. As for the VAT treatment of the platform economy, these are broadly welcomed by the MBB, as the applications and associated burden will be limited to online intermediate platforms. And from a tax compliance perspective, they will bring a more level playing field in the accommodation and transport sectors. Finally, a single VAT registration in the EU building on the current one-stop shop will lead to lower compliance costs for businesses that operate cross-border and that currently require multiple VAT numbers in different member states. This is the way forward for a more complete and simplified EU VAT system. During today's presentation, we will understand in more detail about what this reform is about and the main changes that will be required to be done by businesses and their implications. For this, I would like to thank Mirko Gulic, Senior Manager at PwC, who has accepted our invitation to present the VAT in the Digital Age package to our participants today. We will also hear from our other distinguished guests their reactions about this reform. But for this, I now will pass on the word to our EU Affairs Manager and Head of Brussels Operations, Daniel De Bono, who will moderate this event. And on that note, I hope you will find this information session useful, and I do encourage you to participate because we are interested to hear your views and what is concerning to you so that we can take the messages to reflect in our advocacy work, which we do with the EU officials and institutions. To you, Daniel.
Thank you. Thank you very much, Ms. Mitzi, for setting the scene and kicking off this event. I'd like to now pass on the word to Dr. Marta Sportelli, the CEO of the Malta Chamber, which is the largest cross-sectoral business organization with respect to value added and exports in Malta. Obviously, the Chamber represents the wide spectrum of the Maltese economy, and therefore issues related to VAT are, of course, topics which interest the Malta Chamber. And that's why, also because I know that Dr. Portelli has another engagement very soon, would like to hear her views on this important topic. Dr. Portelli. You are on mute at the moment.
So good morning, everyone. I'd like to start off.
Once again, you hit the mute button. Okay.
Hopefully it remains okay. So good morning, everyone. I'd like to start off, obviously, by thanking the Malta Business Bureau for their constant support to us as the Chamber. Rightly so, because as Daniel rightly pointed out, apart from being the biggest business organization, our representation is quite strong. So we represent 80% of private employment and 75% of all the exports. Daniel, I would like to thank you personally. Daniel meticulously follows all directives, rules, regulations related to competitiveness, financial matters, as well as Christine, who is very focused on digital matters. So as we all know, doing business online and digitally has become the norm, and VAT is an important component of the business world. And although VAT legislation in all countries is basically built on the same principles and basis, legislation might vary from one member state to another. And this is also applicable when it comes to reporting, to digital transactions, and also to digital business regulation. So this is why it was felt that there is the need at EU level to reform the current system and to ensure that it is actually reflecting the digital age. Now, from our end as the Malta Chamber, we will obviously support any reform that continues to increase transparency, any reform that ensures fairness and a level playing field for all, as well as any reform which cuts down on superfluous and excessive bureaucracy and irrelevant reporting. We will also keep insisting on the importance for further simplification for cross-border business, particularly because this is essential both to remain competitive, but also to ensure that all EU countries benefit from the single market. Last but not least, obviously from our end, on behalf of the business community, we will keep on insisting that any new regime cannot simply be introduced overnight, but the European Union must also take into consideration the time and expertise effort required for businesses to get in line with new requirements, as well as the investment that businesses will be required to carry out in their infrastructure. So the scope of today's webinar is to give you an insight of what you should be expecting, but we also expect feedback, concerns, and suggestions, which then will be very ably carried up within the relevant EU officials and institutions by our MBB team led by Daniel Dabono. Thank you once again.
Thank you, Dr. Portelli, for also your remarks in the introductory part of this event. So I'd like to now pass on the word to Mirko Gulic, who is a senior manager at PwC, who will now delve into the detail, right, for us to truly understand what the reform is about, how it will be applied, what changes are expected to be made, what are the pros and cons of it. But for this, I leave it up to Mirko, who is obviously much more able to communicate this to us. Mirko.
Hi, Daniel, and thank you very much for inviting me to this event. And I would like to go through a bit these slides. I have a few slides which I will show to the public here, but of what Alison and Martin just said. Okay, so this proposal is likely to cause a bit of disruption to the businesses, because what we're going to see in the next 5 years is a significant change to how business operates, in particular, how they speak to each other in terms of invoicing and in terms also of reporting. We will see changes in how invoices are issued and the manner they are communicated between a supplier and the customer, especially in terms of a cross-border transaction. Okay, what will change as well is things like the recap statement, which we're seeing as today. So today, as you know, if you transact between cross-border, businesses are required to submit recap statements. Those recap statements will change, and they will likely to be a bit more stringent in relation to timelines and timeframes and the manner how these are submitted. Indeed, the Commission introduces this proposal as to modernize, simplify, and harmonize VAT requirements using transaction-based reporting and e-invoicing. And I think in Malta today, both of those statements or those conditions are a bit lacking today. So we haven't seen them yet. So the concept of real-time reporting, we are not yet familiar with, and the concept of e-invoicing, we are familiar with, but to a certain extent. So we are familiar to, for example, things like a PDF invoice, which today we will see that will change. This proposal was published in 2022 last year, and the idea is to adapt the VAT rules to cover today's work. Okay, as I mentioned before, the directive was drafted in 1977, so quite a number of years ago, where there was no internet present, and therefore certain aspects, certain transactions, we could not see them. We could not see, for example, transactions going in through a marketplace or transaction going in through an e-commerce website. That is something which, of course, it is of today, and therefore there needs to be adaptation to keep up with the timeframes. So speaking about pillars, so this directive sits on 3 pillars. So the pillar of the digital reporting requirements, which essentially is split into 2. There will be the introduction of the e-invoicing. The invoicing, however, not as we know it today. So, for example, a PDF invoice or a Word invoice or an invoice through an email that are not considered to be e-invoicing for VAT purposes. We are moving toward a structured way of electronic invoice, which we'll see a bit later on. We'll be seeing that the European Commission have asked that further information, more detailed information, is presented in a recap statement, and therefore we will see that the new recap statement would be more detailed, and it will contain more information on a transaction by transaction level. Second is the platform economy. So this is the economy which is in today's world. You know, you have a platform, people using that platform to advertise their property, for example, to sell, and there will be changes to this platform in order to have the same VAT rate being applied to certain supplies. This is one of the most contentious, I think, introduction as well in relation to stakeholders when it comes to European Union level. This platform initiative applies to the supply of accommodation and the supply of passenger transport. And we shall see later on the main changes there. The last, and I think one of the most welcomed updates to the VAT directive is the continuous expansion of the single VAT registration. Okay, so we will see that businesses will in the future be less and less required to register for VAT in different member states, because they will be able to submit their VAT returns or even for other member states through their home or member state of establishment. So as Daniel mentioned, this is just a proposal. Okay, so as of today, there is no agreement yet between member states on this proposal, and therefore the first date of change being 2024, it is very close. So we are 6 months very close to this date. It is very difficult today in June to say that these will be introduced effectively in 2024, certain legislation, because of course there is still no consensus. However, I think the main dates which are planned by the European Commission is still that in 2023 there will be an agreement between member states, so consensus on what is going to be in this directive. And in 2025 there will be the simplified, or at least the single VAT registration, so that certain businesses can make use of this extension of the one-stop shop and not register in other member states. The more complex and significant change to be in from this directive is in 2028, which we see that it is quite 4 years down the line, 2028, but it is in 2028 for a reason, because it will have a very big impact on the way today business is conducted, especially throughout the EU. Okay, so from a member state to a member state, this will have significant changes, and businesses need time to adapt to these changes. A bit more detailed on the current changes is the invoicing. So the invoices today, you can have two options to issue an invoice, or a paper invoice, which today I see that it is being less and less common, or else an invoice, a PDF invoice, going in through an email, for example, or through other means of communication, and being presented from a supplier to the customer. Coming 2028, this will be no longer the case. So the paper invoice or the PDF invoice, they will be no longer considered to be the standard method of invoicing throughout the EU. So if a supplier and the customer are based in a different member states in the context of a B2B transaction, the invoice needs to be a structured electronic invoice. And honestly, I try to follow on the European Commission website what is the standard. It is listed as EN 16931, which is a very complex directive, and you would need some input of an IT people to be able to know what this invoice is. So basically, it is a computer message going in from the accounts receivable of the supplier, being transferred in a computer program. Okay, the PEPL, it's called the system, in a computer system, going into the computer of the accounts payable of your customer. So, and that will be the standard. So that will be the standard. So everyone from 2028 which transacts cross-border needs to have the standard implemented. And the question is, but what about the other modes of invoices? So European Commission will not tell you do not issue paper invoices or do not issue PDF invoices, but you have to issue the structured electronic invoices as well. And the people receiving these invoices, at least, they have to have a system to be able to read these invoices, because let's say if a PC received a computer message or from someone else, a human being would need to know how to interpret that message, and therefore there still needs to be a system which will be adopted by the customer to be able to read that invoice, to be able to check that invoice that is still correct and valid. The current proposal is that from 2024, member states can opt to introduce invoicing as an option from 2024. I see this as very, very close, and I am not sure that this will be implemented in time, honestly. So I expect this to be pushed a bit forward. Today, there is as well a condition that for any invoice, the customer needs to accept that invoice, okay, to be able to say, listen, I have received that invoice. As from 2028, because the e-invoicing will be the standard way of sharing invoices between each other, there will be no longer this condition. So the condition that the customer will need to receive to accept this invoice will be deleted from the VAT directive, and therefore it will be like this automatic message, someone sending, someone receiving through an electronic network, and that will be the invoicing. I think one of the more contingent points here at the directive is that the timing to issue invoices will be significantly changed. Okay, today we have 15 days of the following month to issue an invoice, so effectively 45 days from the first of the month. But the proposal is that an invoice needs to be issued within 2 days of when the supply taking place. And 2 days, you mean that, I mean, it is very, very close. So if a supply of a good or if a supply of a service takes place today, then by 2 days' time, so by Thursday, someone needs to issue an invoice. One of the bigger changes as well is to the recap statements. So recap statements today, as you know, are issued quarterly for those of you who provide services. But now that concept of recap statements, it will be completely removed. Now recap statements will need to be submitted on a transaction by transaction basis, so not by an invoice basis, by a transaction basis. And these needs, at least as it's proposed today, to be issued within 2 days of when the invoice has been issued. So a supply taking place today, being a Tuesday, invoice issued maximum by Thursday, and by 2 days after that, a recap has to be submitted to the European Commission detailing the exact transaction of the supply. These are a bit of the burdens which in the introduction we spoke about as well. I think these there are some member states at least which I believe they are not exactly aligned with this, because today's will be impacting businesses quite significantly. There are also some minor updates to the invoices which will be introduced in 2028. Such, for example, you have to put in the invoice the IBAN where the funds will be transferred. There is something which I think we are seeing increasingly today. So the IBAN normally is always on the invoice, but it is something which will become from 2028 mandatory. There are also 2 proposals which are a bit of contentious as well here, that you need to submit on the invoice to write down the due date of that invoice. But in the case of a credit note, you have to write to which invoice that credit note relates. That are 2 other points which are currently being discussed at NU level. I have a bit of a comparison between today and what is going to be proposed. I think the main changes we touched upon. Okay, so the change between the 45 days and to 2 days for the issue of the invoice. We're moving towards a structured invoice from today's paper invoice, and all the other conditions, which I am showing on screen here, are a consequence of that change. Okay, so I touched upon as well the recap statement, that the recap statement is now going from a quarterly or monthly to a quasi real-time reporting submission. And the reason for that, and you can see this in my row, my nearly last row, there will be a change between the Vs to a central Vs. The difference between the 2, that today what you submit goes into this database, which the member states can find information and make their own analysis. The central Vs, so this new database, will capture this information and make comparisons between what has the supplier reported and what has the buyer reported. Because another change that this will bring about is that a recap statement will need to be done as well by the customer, not only by the supplier. So whereas today a recap statement is only done by a supplier, nowadays, as from 2028, a recap statement needs to be done as well by the person buying a good, and therefore, or a service which is cross-border. And therefore, it would be very easy for the member states and for the authorities to compare what one has submitted to these and what has the customer submitted to these, and to reconcile and match them together. We mentioned this as well in the introduction. I think it was mentioned by Martis in her introduction. This is a framework, a proposal, which will change a bit of how marketplaces today, okay, so for example, the MBB of this world will change how they operate. So the VAT, which today they declare. There will be a condition which will going to be imposed on these marketplaces, that when the underlying supplier of the accommodation or the underlying supplier of the passenger transport is not required to charge VAT, because, for example, that person is not VAT registered, the marketplace will be required to charge VAT itself. Okay, so if I give an example, if I have a room which I want to rent for summer, today I put it on a platform, the platform rents that room on my behalf, and my supply to the ultimate traveler, it will be VAT free, right? It will be because I am not VAT registered and I'm not required to. The proposal coming in the next few years is that even though I am not required to charge VAT, the marketplace has the requirement itself to charge VAT to the ultimate traveler. And this is what was mentioned in the introduction, the beginning, that it will be creating a level playing field, that in the sense that the traveler will be seeing the same VAT rate, for example, 7% VAT rate, if he buys a hotel in Malta or he buys a room from another person. And I understand that this has created quite a bit of debate at the European member, because small undertakings are saying, listen, but I have my own exemption, so why should my price go up? Because I am small and that is my competitive advantage in relation to each other. And I believe as well that seeing it from a more high-level perspective, that ultimately we're having a supply which is taxable, so at 7%, for example, and the person does not have the right to recover any input tax. And I think this particular change has created quite a big debate at EU member state. The resulting of this, it will be that, of course, there will be no changes. There will be no between a hotel and a person renting his own room, basically. So there will be both of them taxed at the same rate. One of the last intervention which I want to make today is in relation to the one-stop shop. We have seen the one-stop shop introduced in 2015 as a reply to the change in the place of supply rules for electronically supplied services. And we have seen this to be expanded in 2021 to also include distance sales of goods. And thankfully, we're seeing this, which is being expanded more to include more and more services, right? So we're going to see it include supply with installation, supply on board ships, aircraft and trains, and things like local B2C supplies. So I think this is a great initiative for the European Commission, which will be reduce the requirement for a business in Malta, say, to register in other member states. We have seen companies in Malta owning ships, owning cruise liners, that because they visit a lot of ports, for example, in the EU in summer, they have to get a VAT number in each and every country to be able to charge VAT of that country. With this proposal, that will no longer be the case, because at least they will be required, or if they opt to submit this information in their own member state. So in Malta, they submit to member states. I think what is still missing in this initiative is that you cannot report any intercommodity supplies made in that member state. So, for example, if you have a good in Italy and you want to transfer that good to France, or you have an argument, you still have to register in Italy, because it is considered to be an intercommodity supply starting from Italy. What as well I think you cannot recover is the input tax. So, okay, you are not required to register in all member states because you can use the one-stop shop. But if when you are in that member state, you have received input tax, or you have an expense on which you need to recover input tax, then you will still need to somehow recover that VAT. And that VAT is recovered today through what we call the A directive refund. There's a very long process and stressful process. You have to submit the invoices and the purchases to a database. This database is then examined by the member state where the VAT is due, and if you are very, very lucky, this VAT is paid back to you after a number of months. Daniel, I think I tried as much as possible to go through the main changes of the proposal. In case of course there are any questions, please let me know, and I am happy very much to take them on board.
So first of all, thank you very much, Mirko. I think the presentation is comprehensive. I think it shows that companies need to be aware because change will be required and it will arrive, even though we may discuss a little bit the implementation period. And there will be time for questions. However, before we get to that, well, first of all, I invite our participants, if they have any questions, there will be a time for them to intervene if they wish directly, but also you can use the chat function. There's already one question, in fact, in the chat. So you could also use that mode to post questions, and then I'll read them out. And in the meanwhile, our guest speakers could already have a look at them and reflect and give them some time before answering. So before coming to the questions, I'd like to now introduce Nico Xiberras, who is the Chief Tax Officer at the Office of the Commissioner of Inland Revenue in Malta. Of course, as Mirko explained, this is a package which is still being discussed at EU level, and therefore the Inland Revenue at this point has a role to play because it will advise the Maltese government on how it should position itself in the council negotiations at EU level. And so I would like to invite Nico Xiberras to share with us the views of the Inland Revenue on this package so far, and also he could share with us a little bit where the discussions are at European level, of course, because as Mirko mentioned, some of the, let's say, initial implementation targets are relatively close by, and we have to see whether these are going to be kept or whether they will have to be pushed back. So, Nico, welcome and thanks for accepting our invitation, and I will give you the floor to make your intervention.
Thank you, Daniel. Thank you, Mirko, as well. Very comprehensive, I agree, very comprehensive introduction to the package, to the Commission's package. I think Mirko summarized pretty well, but the package is huge. It's very difficult. I think he did a good job, but the package is indeed huge. There are a lot of details in the package. Took us a long time to study them in detail. We are consulting a lot with stakeholders, practitioners locally in order to have a comprehensive view of anyone who will be affected. We also have consultations planned with the Malta Chamber, the Chamber of SMEs, and we invite any stakeholders who are in this session to get in touch with us. We welcome you with open arms if you want to consult with us in order for us to be able to take into consideration your views when discussing at EU level. So at EU level, as you probably all know, we are involved in discussions in EU Council. So this package, which the Commission has proposed, is discussed in Council, and we discuss it at our level, at the technical level. So we go through it article by article, and the member states give their views and positions on each article. At this stage, most member states have a scrutiny reservation, and rightfully so, because as we said, the details in the package are quite significant. But as a preliminary view, again, this might change. My feelings are that the DRR initiative seems to have majority sort of agreement to where we want to head, but there is a lot of devil in the details. We're still in heated discussions on the details concerning the DRR. But at this stage, it seems that it's very difficult to say that it is a bad initiative. Why? Because a lot of member states are already implementing their own domestic DRR systems, and everyone is implementing them based on their own framework, basically, and not on a harmonized framework. And this will make carrying out business across the EU a nightmare. If you do not have a harmonized framework of e-invoicing, it will make carrying out business across the EU a literal nightmare. So at least I think it is difficult to disagree with the need to have a harmonized framework for invoicing within the EU at least. So that is the general feel there. On the platform economy, again, heated discussions there. Some member states do not agree at all with that, with the initiative, because of many reasons. For example, one of the reasons is that on short-term accommodation, for example, one of the arguments is that member states will be experiencing a shift from the collection of VAT by taxable persons who are physically there, because they have the accommodation is physically there, to platforms which are not necessarily physically there. So control-wise, some member states are arguing that they prefer the obligation to account for VAT to be by a person who is physically or at least there is some level of connection, physical connection to that member state there, not shifting the obligation to collect VAT onto a platform who may even be a non-EU platform. Apart from the discussions as well, which Mirko mentioned on fiscal neutrality concerning when it comes to SMEs. However, there are a lot of discussions there again, and I think there is a lot of focus on short-term accommodation there in the platform, and we are forgetting, I believe, other business models, such as, for example, the passenger transport business, the passenger transport sector. Because there, I believe, the platform initiative could be a potential solution to cater for distortions of competition which exist locally. Locally, I'm sure I'm not the only one that appreciates that organized transport providers are at a relative competitive disadvantage when compared to platform transport, passenger transport providers. Why? The platform passenger transport providers are relying on various individuals, which are effectively, I would say, almost employed by that platform. They are separately registered for VAT, thus relying on the SME exemption, and therefore they are able to, through the various registrations of their quasi-employed persons, they end up in a situation where they do not charge VAT. And when compared to the organized company which employs the drivers themselves, these companies would be at a relative disadvantage. So you need to take into consideration not only short-term accommodation, but also the other proposed sector when considering whether this platform initiative could be a solution or not. We are still assessing there. And again, we are open to feedback on that initiative. Regarding SVR, I think Mirko summed it up pretty well. I think no one can say that those simplifications are not needed. We are thinking about various solutions there, which I think will work, which will definitely, that are needed and will definitely work. As regards status, we're already working on, we've already discussed compromise text. For anyone who doesn't know how it works at council. First, you have a proposal. Then the council starts to gather the views of the member states. And then once we have a sort of direction where we want to go, what we do not want, what we want, the presidency of the council suggests compromise texts. And these compromise texts are amendments to the proposal. There are a lot of changes already in these compromise texts, I can say, and most of these changes pretty much cater for the feedback that we've been receiving from the business sector, such as, for example, we've been receiving a lot of feedback that the 2-day time limit to issue invoices is not something which can be done. It's not practical. And we, as Malta as well, we have submitted our feedback in that respect, and we have seen a change in the compromise text to possibly extend that deadline, the deadline to issue invoices, in order to make it practical for business. Because if it is not practical for businesses, it will not work. And what we do not want is something which will not work. Okay, so it is important that businesses provide their feedback accordingly, because it is not us who will be dealing with these requirements, but it is the businesses who will be dealing with these requirements, and therefore it is important to come to compromise on something which will actually work in practice. I think if there is anyone who has any questions, I'm going to limit my intervention there in order to not keep going and going and going. I can say as much as you want on this topic. Feel free to ask any questions or anything specific which you have in mind, which you want me to add to my intervention.
Thank you so much, Nico. Yes, in fact, that's one of the reasons why we're holding this event now, not after there is an agreement, because then it would be too late to bring our concerns. There are already 2 questions in the chat, but before giving back the floor to Mirko or Nico, I'd like to invite our last guest speaker for today's event. Mariella Caruana is an advisor at Business Europe, who I'd like to call a colleague, because we, through the Malta Chamber, are affiliated in Business Europe, and so we meet often to discuss these issues. And I invited Mariella, in fact, to share with us a little bit of the European perspective from a business angle, of course, to see if the issues, because I know she knows Malta and what the issues of Maltese businesses are, whether they align with the same concerns that exist in other countries. But also, perhaps Mariella can raise a few points of concerns or questions that through Business Europe is raising with the EU institutions in this case. Mariella.
Thank you, Daniel. Thank you for the invitation and for the introduction. And as you rightly said, I cover taxation at Business Europe. Business Europe is an organization that represents the business community in Europe. So not just the EU, but also businesses in the EEA and Central Eastern European countries and the UK. And over the last months, we have been analyzing in detail the VDA package. It's a very large package, as the previous speakers have been saying, and I think I very much agree with what Mirko and Nico have been highlighting, because it is a package that is expected to have a large impact on businesses and on businesses of all sizes, really, that operate in the single market. What we've done in Business Europe, we have published our official views in a position paper. So we've come together with all our member federations across Europe, and we've tried to come up with, as much as possible, a balanced paper that, first of all, recognizes what we appreciate from the point of view of businesses, but what can also be improved, because in practice that there are some elements of the proposals that could potentially cause difficulties in practice. And I think it's worth starting off by saying, and Alison hinted at this already, that VAT is a very important revenue raiser in the EU. It is the third largest revenue raiser, just after personal income taxes and social security contributions. And so at a time when the EU's budget is facing increasing pressures, there's a lot of talk about how best to fund the budget. I think it's only appropriate that the Commission focuses on reducing the VAT gap, because I don't believe that it will eliminate the VAT gap, by improving tax control and by updating the rules to decrease the VAT reporting errors. The Commission expects that with VIDA, there will be savings for businesses. But from our perspective, what we have said is that I think we need to be mindful of the fact that, as Nico was saying, VIDA comes at a time when a number of other member states have already introduced their own digital reporting requirements, or they are planning to introduce their own. So we're speaking of a major compliance effort. We're speaking of a significant investment that is required by businesses, because they need to adjust their processes and they need to adapt to new capabilities that Mirko was explaining in more detail. And so, first of all, we've asked that, given this significant investment, we've asked that the proposal is supported by other measures. So, for example, faster VAT refunds, faster audits, reduced inquiries from tax authorities, because that will ensure that there is an optimal implementation of the proposal. And it will also ensure that honest taxpayers are benefiting from less onerous obligations, and they are benefiting from increased tax certainty in the EU when operating there. The business community is certainly supportive of a uniform standard of invoicing. I think that is a message that we have collected from across the board. And really and truly, it makes sense, because invoicing is not only a tax obligation. Invoicing is a very important tool to keep a business's cash flow and its finances in shape. And so it has the potential, VIDA, to set the foundations for some form of simplification, let's say, of the VAT rules. But as you rightly said, Daniel, we think that it needs some adjustments if the Commission wants to get political commitment of the 27 member states, but also to ensure that ultimately we have a more competitive single market that promotes the growth of businesses of all sizes. Where we do not want VIDA to end up is to introduce more administrative obligations, because that's unlikely going to achieve the aim of the proposal, again, which is to reduce the VAT gap and to raise more revenue. And that would only have adverse consequences because we're speaking of a large majority of honest businesses that are really trying their best to comply with a patchwork of obligations across member states when they are operating cross-border. There also, we think, needs to be consideration for smaller businesses, because first of all, one size fits all doesn't work. You cannot place the same amount of obligations for large and small businesses alike. And, we have in fact proposed an alternative and optional approach that could work for SMEs, because again, some technical parts of the proposal, the 2-day limit, for example, in particular, could result in increased obstacles. And you could have SMEs made up of 2-3 people, and with those requirements, it means that essentially people cannot go on holiday in order to make sure that they are compliant with the regulation. And is that fair? Is that really going to reduce the VAT gap? Questionable. So we've asked for this to be revised. One other point that we have raised is that the exchange of information between member states' tax authorities through the electronic invoicing and the reporting will need to be protected, okay? We expect that there's going to be a large amount of strategic, commercially sensitive and personal data that's going to be shared. So it is important that VIDA is accompanied by a robust process to detect and prevent the misuse of information and or cyber attacks, because we want to safeguard the proper functioning of the digital reporting rules. We're largely opposed to the elimination of summary invoices, because we think that these are a major simplification tool for businesses of all sizes. If you are selling goods or services in bulk or on a recurring basis, or where you have large volumes of, say, for example, intra-group transactions, or even you could have some sectors that have set up their invoicing systems around summary invoicing, namely in the manufacturing industry. I think replacing summary invoices with invoices on a transactional basis is expected to unnecessarily raise processing costs. Because of course you need to report a high number of transactions or even correct some transactions in some instances. On the rules for the platform economy, I completely agree with what Nico was saying. And in our group, we do not have one view. In principle, we think that it is fair to attempt to achieve a level playing field, but the proposal should respect, as Nico was saying, the principle of VAT neutrality, and it should also not disregard the existing rules in certain member states that, for example, confer specific exemptions. And then on the one-stop shop proposal, Mirko has already explained the benefits, so I won't go into detail on this. And we have certainly come a long way in this field over the years in terms of trust and cooperation, if anything, with other member states. But we've also called for the Commission to continue working with the member states to improve the current cooperation, because it would be good to see greater levels of trust and efficiency, for example, permitting input VAT deductions, permitting VAT refunds in the one-stop shop, and also seeing harmonized sanctions and interest payments. So I think in summary, it will be key. This is a major reform process, and it will be key that, you know, for every measure that is being proposed, there is a thorough analysis of the effectiveness of that rule to ensure that it is really going to achieve the aim that it is set out for, essentially, and also to ensure that in the process, there's not too many unnecessary complexities that are introduced. Because again, as I said, ultimately our aim is to continue advocating for a single market that improves a truly improved environment, and that reduces compliance costs and promotes the growth and competitiveness of European business.
Thank you, Mariella, for that comprehensive analysis also from Business Europe and the European angle. We don't have much time left, but I'm sure we can overlap with 5-10 minutes if our guest speakers allow, and if our participants wish to stay slightly longer. We already have 2 questions in the chat, but please, by all means, feel free to raise a couple of more questions, either through the chat or by raising your hand to speak directly to us. So in the chat, we have 2 questions. The first one, I think, is a very direct question as to whether e-invoicing is envisaged for Malta in terms of domestic transactions, because we spoke a lot about the cross-border transactions. And the second one, slightly more specific, it's about what would define a marketplace, at least with respect to this, I would assume the second proposal within this package. The question states that since most travel agents are now online platforms, they can be captured and deemed to be a supplier regime. And would they also be subject to TOMS? For those of you more familiar to accounting practices, I'm pretty sure this is a normal terminology. So Mirko and Nico, whoever wishes to start or continue.
I can start with the first question on e-invoicing on domestic transactions. So just to make it super clear, what the proposal is setting out to do is to introduce e-invoicing and digital reporting on cross-border B2B transactions. So B2C is not covered. It's only business to business, cross-border. The proposal also sets out that member states may impose a reporting obligation on any other transactions. Okay, and e-invoicing may impose mandatory e-invoicing and digital reporting on other transactions, which includes, of course, domestic transactions, not cross-border transactions. whether Malta intends to introduce the e-invoicing and digital reporting on domestic transactions is something that we have no thoughts yet. We are studying the possibilities because indeed, if you have a business locally who is engaged in cross-border transactions, has invested substantial sums in developing their ERP to be able to send and receive e-invoices. There we can possibly, it would possibly make it simpler if that business could also transact locally with e-invoices. So we are studying the options there, again, to make life easier for businesses on how they can transact locally as well. But we're still at a very, very preliminary stage. We're still studying the advantages, the benefits, costs for businesses, and such other considerations. On the first question, I leave it to Mirko. And
Thanks.
then I'll intervene if need be.
Thanks, Nico. I'm seeing that the first question comes from Ellen, and I take this opportunity to say hello to Ellen, who is a fellow university colleague. We did such a number of assignments and discussions together way back in the 2000s, early 2000s. So Ellen is asking, how one defines a marketplace? So a marketplace is actually a term which combines quite a few other terms with it. Okay, so it combines a platform, it combines a portal, and it combines any other similar platforms. Okay, and the proposal, there is a small definition on what is that. It is it's an online platform which facilitates the connection between two or more distinct but interdependencies of users. So bringing together basically a supplier with a customer. In these interactions, one of the parties to the platform, the provider or the underlying provider, could offer services to the other party, such as the consumer, in return for a monetary consideration. And the platform usually charges a fee for the facilitation of the transaction. So I think to address your question, Ellen, in the event that a travel agent is acting as a platform, so is allowing a lot of other suppliers to provide their service or their goods on a platform, and bringing this platform, opening up this platform to the further customers and bringing them together, then I think the answer there could be yes, but I think it depends on transaction by transaction basis there, as always. And however, these platforms, it is specifically stated in the rules that they are not captured by the TOM. So these platforms, they will not be using their margin scheme to calculate their VAT which is due. They will calculate the VAT which is due on the supply by the underlying supplier. I'm not sure whether Nico wants to intervene or it's fine.
Yes, anything you'd like to add, Nico, on this?
Yes, agreed, Mirko. As Mirko said, if these travel agents are providing this short-term accommodation through a website, basically, if they are not specifically excluded, because there are some specific exclusions. For example, if the travel agent is merely listing the accommodation on its website and just, for example, helping in the processing of payment, there it would be excluded from being a deemed supplier under this platform initiative. Regarding TOMS, it is specifically excluded. If you are a deemed supplier, it is specifically mentioned that TOMS will not apply to that deemed supply.
Very good. I hope that, or I believe that answered the question. Before we close, I'll give one more moment to see if there's any other questions that any of the participants would like to raise. Okay, if not, I'll take this opportunity to, before closing, to thank our guest speakers. So we had at the very start, Alison Mitzi, the president of the Malta Business Bureau, and Dr. Marta Sportelli, the CEO of the Malta Chamber. I'd like to thank Mirko Gulic, Senior Manager at PwC, for sharing with us the detailed presentation. Hope that our participants understood now the VIDA package a bit more clearly. And of course, thanking Nico Sheberras from the Office of the Commissioner of Inland Revenue and Mariella Caruana from Business Europe. So this is, of course, one of a series of events that the Malta Business Bureau organizes with respect to different EU policy and legislations, which are not limited to tax, but vary to any policy that is somewhat related to business. So, of course, keep following our social media channels to know about our upcoming events. And before concluding, I'd like to thank my colleagues, Ralph Grima and Christine Seid, for helping me organizing this event. And with that, I leave you for a more productive morning. I hope this event was useful, informative, and until we meet again, thank you and goodbye.